Hey there, traders and investors. Welcome back to Cash Current, where we dive deep into the world of trading and investing. If you're new here, don't forget to hit that subscribe button and ring the bell icon so you never miss an update. Today, we're going to explore one of the most popular and fascinating methods of analyzing stocks: technical analysis. So, what exactly is technical analysis? Simply put, it's a method of evaluating securities by analyzing statistics generated by market activity, such as past prices and volume. Unlike fundamental analysis, which focuses on a company's financials, technical analysis looks at price patterns and market trends to predict future movements. One of the key tools in technical analysis is the candlestick chart. These charts provide a visual representation of price movements over a specific period. Each candlestick shows the opening, closing, high, and low prices for that period. Now, let's break down some essential components of technical analysis. Technical analysis divided into 4 parts, and we discuss its 2-part in this video, and further 2 parts we discuss in upcoming videos. Price patterns. First up, price patterns. These are formations created by the movements of stock prices on a chart. Common patterns include head and shoulders, double tops and bottoms, and triangles. These patterns help traders identify potential reversals or continuations in trends. For instance, the head and shoulders pattern typically signals a reversal from a bullish to a bearish trend. Recognizing these patterns can give you an edge in predicting market moves. Technical indicators. Next, we have technical indicators. These are mathematical calculations based on historical price, volume, or open interest information. Indicators like moving averages, relative strength index, RSI, and MACD, moving average convergence divergence, are commonly used to identify trends and potential entry and exit points. For example, a moving average smooths out price data to identify the direction of the trend. The RSI, on the other hand, helps determine whether a stock is overbought or oversold. And there you have it, a basic introduction to technical analysis in the stock market. Remember, mastering these tools and techniques takes time and practice, so keep learning and stay patient. If you found this video helpful, please give it a thumbs up and share it with your fellow traders. Don't forget to subscribe for more insightful content on trading and investing. Until next time, happy trading.